Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a slightly mixed picture.
Sources indicate that could have sent a proposal lowering GST rates on two-wheelers and small cars.
There's unlikely to be any change on the 25% additional tariff on India.
Trump will be meeting on Monday with President Zelensky.
24,700 is the first resistance. It's the recent high. I think we clear that straight up on the way up.
DGTR, they have recommended the final safeguard on the steel imports for 3 years.
Got about 1.1%, 1.2% of the Nifty, 24,900.
You know, it's about time that the GST system is simplified. Number of slabs brought down to 2.
Two-wheelers having the engine capacity up to 350cc or equal to 350cc for them, tax, that is GST tax rate, can be reduced to 18% from the current rate of 28%.
We are covered for Q2 and Q3. We have a couple of components, a few components to address in Q4, and we have a reasonable path.
It's a hope rally right now, of course, because of the GST cuts that the Prime Minister announced.
You can see stocks like auto and consumer durable names rallying.
This tells CNBC-TV18 that all the front-loading that has been going on for all these weeks has now led to a shortage on mother vessels designated for the USA.
A big uptick on the markets right now.
Okay, markets holding on to the triple-digit gains, 300 points on the Nifty, and it's looked pretty good. GST, of course, is the dominant theme. We're coming to you from the CNBC-TV18 Motilal Oswal studios last hour with me, Prashant, and my colleagues Nigel and Survi. Guys, afternoon.
Hi, good afternoon, folks. Absolutely a green day thanks to those GST hopes. And what a gain on many of these stocks. I mean, Maruti, Hyundai, I don't remember the last time I saw them up 6, 7, 8%. Bumper of a move on autos.
Well, that's right. And I think the last 60 minutes is going to be crucial, which could be a make or break in case, investors want to take some money home, or in fact will be end at the high point of the day. Because, intraday we lost our way a little bit, but that dip got bought into. So it's still a very good looking screen.
Absolutely. And I think the data today, Nigel, should be interesting as well. How much of this is short covering?
Yeah.
Right? Because there was a lot of shorts in the system. So maybe across sectors where this has happened, GST potentially perhaps is going to be lowered. There is that element of short covering action. Otherwise, and look at autos, for example, the Marutis of the world, and or for example, the consumer durable sectors, for example. Look at something like PG Electroplast, right? I mean, big move. But again, these are idiosyncratic one-off names which got smashed and then they're starting to come up as well. Or other sectors for that matter. These are large moves which are coming through. So how much of this is just sort of short covering, or is this really going to be a big durable one? Just think back to, for example, the time of the budget, right? When you had that big bonanza in terms of tax cuts, etc. Everyone said, well, it's going to show up in a big way in the next 2 quarters. But it has really not. So is this going to be one of those, or is this really going to be a big durable one? I think that is the question. But my sense is maybe the bulk of the gains on the back of the GST news flow perhaps is now done with these 7-10% moves which we're seeing across the board in many sectors. More in terms of market action in a bit. Let me just quickly run you through what's coming up here. Lots lined up over the next 60 minutes. So hopes of fresh reforms and the GST rate rationalization hope sends markets roaring. Nifty comfortably above the 24,900 level. Sensex holds 800 points. Auto, consumer durables are leading the way. Steady operating performance in Q1 fuels the up move in Ashok Leyland. So brokerages have a positive stance. We'll detail that out with Sudarshan in just a bit from now. Centres eyeing a cut in GST rates in fourth quarter this calendar year. Cement makers, two-wheeler, footwear, consumer durables, all are higher, and trade a comprehensive analysis with Hormuz coming up in terms of likely beneficiaries, etc. So it's a packed lineup here, and there is more news as we begin this edition of Closing Bell. Survi.
Absolutely, lots lined up, and let's not forget that this evening, all important events probably in the US, and the market is anticipating more headlines from there as well. By the way, I should point out that global markets are absolutely flat and quiet. in anticipation of what lies ahead. Is there going to be a breakthrough in that meeting between President Trump, Mr. Zelensky, and a whole host of EU leaders who are gathering in the US? By the way, on a side note, since we're talking global, most markets are flat. Sam Altman today has made a statement, and he's been quoted in a different report, and he's said that someone asked him, is there a bubble building up in AI stocks? This is getting too much. And he said yes, that there is over-enthusiasm about AI stocks in the market. So that's on a side note, of course, to chew over. But back here, when we look at the screen, I mean, talk about some of the biggest gainers. Let's just actually flash maybe the Nifty, the entire Nifty hotboard. It's not too different from how we started at 9:15. Let's get the stocks board up, all the 50 stocks, if we can pull it up on the screen, because it's a wide swathe of green. Of course, autos are leading it from the front. I mean, Maruti, for instance, is the top gainer, 9% higher. M&M, there are banks that are up. I was saying the entire 50 stocks, so you can pull that up as well. The heat map, the Nifty heat map, because it's not too different from where we started at 9:15. Till now, the market has digested the gains pretty well. Yeah, there we go. So you only have the bottom row. IT is the one that's underperforming or that's not participating. Other than that, most other stocks and banks are actually doing very well as well. Even large stocks like Reliance have all contributed. And of course, consumer and auto are leading it from the front. So I thought we'll just start with the heat map. It gives us a good sense of how wide-ranging this rally has been so far.
Oh, well, that's right. Last week, in fact, I think Mayuresh was talking about Pennar Industries, if I'm not mistaken, into a query. We'll just try to reconfirm that. But that stock is up 20%. Pennar Industries, not a name we talk about very often. That stock's up 20%. You have Rico Auto, another one that's disappointed quite a few times in the past. That as well is up close to around 8.5%. So big move is what we're seeing on that name. And Lloyd's Enterprises as well, I think they have a fundraise that's going on right now. It went ex the corporate action, and that's why the stock was lower last week. As we speak, that one as well has now spiked to the high point of the day, citing all these stocks because all of them are some of the top volume movers in today's trading session. Big moves on all of these names. So from the broader markets as well, you're getting select stocks that are doing a thing of their own. How do you position yourself, though, in the final hour of trade? Somil Mehta joins us on the show. Hi, Somil. First couple of hours, actually, you would have been happy looking at the screen, right? The Nifty was doing well. The Nifty Bank went ahead and took out its 20 DMA as well. But the Nifty Bank is rejecting that mark, that 20 DMA, which is a bit of a problem pocket. I think the next leg comes once the Nifty Bank gets past that. But how do you trade the Nifty as well as the Nifty Bank from these levels?
Hey, good afternoon. Good afternoon to everyone. Absolutely, that's the concern. Bank Nifty has not yet crossed the 20-40 daily moving average. That's one concern. But if you look at Nifty has given a positive close, started making high tops, high bottom after 6 weeks of negative candles. A positive close in the last week, started making high tops, high bottom now. Closing, trading about 20 and 40 daily moving average. That's a very good sign for Nifty. And I think the next targets for Nifty would be around 25,500, 25,700, the previous swing highs. So I'll be targeting those levels, the previous swing highs, and I'll be very positive on Nifty. Bank Nifty, if we are talking about Bank Nifty, yes, that's a concern that we've not crossed that. But I think looking at HDFC Bank, SBI, even ICICI Bank, I'm pretty positive, and I think within a couple of days, we will see Bank Nifty closing about 20-40 daily moving average. So my view on Bank Nifty is positive as well for the targets of around the previous swing highs, which is 57,300 levels. And that's what I'll be targeting in the short to medium term outlook. The bar on the downside is 54,900. If it closes below 54,900, that'll be a concern.
Okay, Somil, good afternoon. Good to get that view. In terms of stocks, what do you have?
I have two stocks. First one is Titan. A medium term was always positive. It has resumed the uptrend. Stop loss is 3,460 and the target is 3,800. The second stock is KEI. KEI again, same thing, a flag pattern. The flag pattern has broken on the upside. Momentum indicator has given a buy signal, fresh buy signal. Stop loss would be 3,800 and targets would be 4,150.
Okay. All right, got it. Somil, thanks very much for joining in with some of those trades. We'll come back to you in a bit for more. Let's bring in Dipan Mehta onto the show. Dipan, thanks so much for joining in. Good to have you on. So much happening this Monday, right? Finally, a green Monday where our screen is looking better than most other global screens this afternoon. So let's dive straight in. These outsized GST excitement reactions that we're getting on auto stocks, first of all, Deepan. Do you think they're justified? Could there be more? Is this the start of something new? Or is this going to be a one-day wonder on big stocks like Hyundai or Maruti?
Yes, good afternoon, and thank you for having me on your show. Let's keep our fingers crossed that it actually happens, because I think the small car segment within the passenger vehicle industry certainly needs a boost. And if GST is reduced, the cost of ownership is reduced, actually EMIs go down because of the value of the vehicle goes down, and because of lower interest rates, then that certainly will give an impetus, which is much needed for Hyundai and Maruti. So I do hope it takes place. I think the likes of M&M are doing pretty much fine. They are in a different zone altogether with the new models and the focus on UVs. But definitely Maruti and Hyundai need this shot in the arm, because we have been seeing flattening of volumes for these two companies. So let's hope it actually takes place. And if it does, then certainly it will revive the fortunes of these companies and take them to maybe another new growth path as well, because they have the capacities to produce. So let's wait and see what happens over there. No point in buying before the actual announcement takes place.
Okay. All right. Hi, Deepan. Good afternoon. Good to see you, Win. Deepan, you showed the cement sector some love, I think, after very, very long. I recall when you did a bit of a pivot over there. I was happy to hear, because for the last many years, I was asking Deepan, what about metals? Don't like. What about cement? Don't like. Now, not only you like cement, they've gone ahead and they're going to possibly be some rationalization on GST rates for them. Now, effectively, the EBITDA per ton may not shift too much. But what will happen is volume pushes like to come about. It gets cheaper. What's your reading of the same, and what do you like?
See, Nigel, I don't think that reduction in GST is that much important for cement, because cement is such a basic material that if you need it, and certainly it goes a long way towards reducing construction costs, be it infra side or real estate side. And to that extent, I think the benefit will go to the real estate companies more than the cement companies. So I'm not certain that just a cut in GST will really change the fortunes of a cement company the way it may do for automobile companies or other consumer-oriented businesses. But nonetheless, I think cement has been doing well. It's a cyclical industry, and we are seeing improvements in the cycle over there. Prices are steady. The earlier level of overcapacity coming in, those kind of risks have gradually reduced. Cost of manufacturing has come down because of commodity prices being lower, especially fuel, transportation, etc. So I think they're in a good space at this point of time. Valuations are reasonable. I think I would still go with ACC and Ambuja within that particular group. But I think all the other companies, including Ultratech, Shree Cement, JK, all did pretty well. So, I mean, it's a very, I would say, industry which has got similar type of prospects. So any company you pick over there will tend to do pretty much well. But generally, yes, still positive on cement, and definitely expect them to have a great quarter once this monsoon is over and done with.
Okay, coming to you for more questions. Let me just quickly, Deepan, address one stock, right? Ashok Leyland, record high. Sudarshan is here. Numbers came out, I think, on Friday. Why is the street excited? So take it away.
So all the auto companies are today in top gear, up somewhere in the range of 3 to 8%. But one stock, that Ashok Leyland, has more reasons for the upside apart from the GST cut that we're expecting post PM speech on the Independence Day. Some of the positives are, first, company reported Q1 earnings on Friday at the fag end of the market hours, and that earnings had looked very healthy by the first look. And after the one commentary that company has given in the analyst call, and those commentary was positive. And apart from that, company has maintained outlook for FY26. And after the earnings and the con call, all the brokerages either have maintained positive stance or have raised target price and their take. So first one is UBS. It has a buy call and target is 150 per share. It says that it was an operational discipline that supported company to report a healthy set of margin Q1 of FY26, and also domestic M&HCV industry to grow at mid-single digit, and LCV growth to be slightly higher, because company believes that H2 is going to be better than H1, and believes that PAT
PAT positive that company is likely to report by FY26, and in the Q1, Switch Mobility had turned PBT positive. GS has a buy call target is 140 per share. It says company may see improvement in margin from 11.7% that it had reported in FY25. In Q1, margin was 50 basis points higher than FY25 level of 11.7%. It has raised FY26, FY28 EPS estimates by up to 7%. City 2 has a buy call and target is 140 per share. It says outlook is positive despite current industry demand being tepid. CLSA has upgraded the stock to outperform and target is 136 per share. It says companies outperform industry volumes in both M&HCV and LCV, and it believes that it's in the last leg of CV down cycle and expects cycle to reverse from the end of FY26. So overall, it's looking very healthy for Ashok Leyland, and that's reflecting in the stock price, currently up more than 8%.
Okay, thanks very much, for that. Deepan, out of all the names, the GST related sort of rallies that we are seeing, which do you think will, in this stretch give another 15-20% from here? Your opinion?
No, I think autos, certainly Maruti, Hyundai, the air conditioning companies also there at 28%, and with a kind of poor performance because of weather conditions which we have seen, we could certainly see an improvement over there. So these are the two large categories, I think, which will be clear beneficiaries of a GST cut, and they are price sensitive. So it's not just the GST cut, but the fact that lower cost can give a boost to demand. So one is to keep that in mind. So I would just focus on these two, and we've seen corrections or at least underperformance from both these passenger vehicle and the air conditioning companies. And this particular event, if it were to take place, GST cut, can certainly reverse this underperformance which we have seen in these two segments.
PG Electroplast, for example, and just using an example, right? Because we spoke to them last in terms of a AC player, but on the EMI side, they said that they've got 1 million odd units in terms of inventory, and they got 1.5 million inventory in the channel. I mean, this is just them, and AC apart from the outside of PG is separate. So, Deepan, you think if say for example there is a cut, and this inventory was supposed to run down by the end of the year, according to them, there is a bit of a pricing issue as well? I mean, prices go down because of GST cuts. You're sitting on all this inventory. I
get your point. I didn't think of it that way, that you may have actual inventory losses over there. But the street will see beyond that, and they will quantify it and say this is like a one-time event because of the inventory which is there. And that is true for a lot of other AC companies as well. So it's a one-time thing, and we'll kind of remove it, strip it off from the core earnings and move on. I think that will be the plan. But end of the day, I think, if these companies get a boost like this and with lower interest rates, because I believe a lot of consumer appliances, air conditioners are being bought on EMI as well. So all of that can, rejuvenate the industry, and it can, take them to the next level. In any case, these companies are focusing very heavily on reducing their costs also. So benign commodity prices also will improve their operating profit margins. Then operating leverages also come into play. So let's see if this actual cut comes. And mind you, 28 to 18 is a big cut, So it may have a material impact on the value of the ACs.
I just want to pull up a one-year PG Electroplast chart. Now, one-time correction, and we don't know. I mean, already Q1 became such a huge one-time issue. Hopefully, it's a one-time issue. The stock's halved. I mean, from a 1,000 rupee stock, it's a 500 rupee stock today. And Deepan, now, if there is an inventory correction, then it'll have to be another one-time adjustment, right? So, short point specifically on PG, would you be, if you're not in the stock, then fine. Then it's a separate question. I mean, would you think that these are great levels to get into a name like PG Electroplast? And if you're someone who's holding and nursing those losses, say you bought it in higher levels, 700, 800, what would your advice be looking at everything that's happening around?
So I think the time to sell is gone. So you just need to hang in there. 3, 5, 10-year prospects of PG Electroplast, other AC companies is very good. Our preference remains companies like, say, Voltas, Blue Star, or Amber. Amber especially because I think the track record have been phenomenal. They're diversifying their production and product base as well. So that's also great. And it's a much bigger company and has got a lot many relationships. They're focusing even on railway air conditioning, which is like a good growth engine for them. So that's our top pick. Usual disclosure, we and our clients are invested. But mind you, in the room AC segment, Blue Star has done great work. They've gradually increased their market share as well. It's an expensive stock. So if it's available at reasonable valuations for some reason or the other, based on future earnings, then investors could consider it. I would rate Blue Star better than Voltas also, given their track record.
Okay, so Blue Star would be getting your top preference in this whole AC space. Autos you're staying away from, in the sense you want to just see the proof of the pudding before deciding whether to jump onto autos.
No. So you have to see the proof of the pudding for both ACs as well as auto.
Okay.
He's having the pudding.
Eventually, he's going to have the pudding.
To bite. Surabhi, on autos, this was it was just food for thought, right? Interesting point. Somebody sent this. He said that they calculated basically Alto Maruti, right, entry level car, price drops from 3.5 lakhs to 3.25 odd lakh rupees, right? So the question, and it's an interesting way to ask the question, for those who were unable to afford an EMI of $64. I mean, in dollar terms, I don't know why they converted, to buy an Alto to begin with, the reduction results in a $5 saving. Would a $5 saving, for somebody who can't afford a $64 EMI, would a $5 saving be a game changer? I mean, I thought it was interesting. But again, I think we'll have to look at if the market itself has moved away from entry level to SUVs, etc.
Yeah, exactly.
If there's no, so that's another point.
But Mr. Bhargava has been making that point. At least he, from his vantage point, being the doyen of the small car industry, so to speak, he's always said that cars are just too unaffordable, and that's why their smaller cars are not selling. But that's a debate that continues. But Deepan, before we let you go, GST, the excitement is playing out in all kinds of stocks. Look at what's happening to hotel names like Lemon Tree, where there's a hope that for room rates which are less than 7,500, the rate will come down. Look at Bata, look at some other shoe stocks as well. Maybe some relief for footwear, which is below 1,000 rupees, where again the GST could come down to 5%. Anything else which you think in general consumption will improve, so it's time to load up in the shopping cart?
See, Zubi, I'm not in favor of just buying based on the expectation. Let the actual GST cuts come through. What are the caveats over there? And then look at maybe buying these companies, even if they're 5-10% more expensive. At least the risk return will certainly favor you. And nonetheless, I think the consumption space has always been a very important investment theme. And within that space, I think hotels, hospitality, healthcare, that should be where the focus is for a lot of investors. And I particularly like the results from some retail companies like, we discussed earlier also, Vishal Mega Mart, V2, I think they did exceptionally well, better than Trent also. So I would see a revival in the retail side as well. And some of the other specialty retail companies like I think Metro Brands also you highlighted. That's an interesting company. This Campus Activewear, there's another company, small one called Ethos. The numbers weren't impressive because they're investing in new stores. So like the specialty retail, general merchandise retail, I think those stocks will significantly benefit not only from GST cut, but overall improvement in urban and rural consumption.
All right, Deepan, we'll leave it there. Thank you very much. Good conversation as always. Appreciate your time here on CNBC-TV18. We'll take a break here. Markets are up about 280 points. So holding on to gains. Jigar Mistry joins us on the other side. Hormuz, of course, sets us up with the unusual big movers, which are outside of this entire GST-related move. Stay tuned. Coming up.
Welcome back. 280 points up on the Nifty. The green continues to be, all around on the screen. Let's go across to Hormaz. As always, he's got plenty of buzzers for us. Hormaz, usually we have nothing to toast you with because the market's flat. Today the market's buzzing, but I know you must have gone beyond the obvious names, so tell us more.
Oh yes, there are beyond the obvious names and a lot of food movers around about in today's session in the broader markets, both on the up and the downside as well. We start out with Bikaji Foods, and the 7 to 8% up move that we are seeing today is the biggest single day gain that the stock has seen since February of this year. And before the stock gained on Thursday, it was on an 8-day losing streak, and now it has had this 2-day up move that it has seen. Now we already had 7 lakh shares traded compared to around about 3 lakh shares, which is a 20-day average. And courtesy of this up move today, the stock has nearly turned positive for 2025. What has turned positive for 2025 though is Pfizer, and take a look at the 9% up move today. This is the biggest single day gain it has seen since May, and this is not just today, but it's the 5th straight day that the stock is trading higher today, with 3 lakh shares already changing hands compared to a 20-day average of just around about 35,000 shares. What has moved higher very suddenly though is Lakshmi Organic, and it's a 20% circuit on the stock, the biggest single day gain on record. We've already had more than 1 crore shares that have changed hands at a 20-day average of just 6 lakh, and even after this up move, the stock is still down 9% on a year-to-date basis, and has a dubious record of not having had a single positive annual year since it listed back in 2020. Now, the other mover on the upside is Supreme Petrochem today, and that 12 to 13% up move is the biggest single day gain that the stock has seen since April of 2020. And before this up move, the stock has declined in 6 out of the last 8 trading sessions. And today's volumes though, 4.5 lakh shares changing hands compared to a 20-day average of just 40,000. And it's been a good up move. The stock has seen positive annual returns every year since the end of 2019. And lastly, on the downside though, a stock that is bucking the trend today is Datamatics, is down 10% in today's session, the 3rd straight day of losses. In the last 3 sessions, the stock is down almost 20%. But this fall has come on lower volumes. While the stocks moving higher are going higher on strong volumes, this one has declined on lower volumes. Look at 6 lakh shares, a 20-day average of over 10 lakh shares. And despite this 20% fall in the last 3 sessions, the stock is still higher by 35% year to date and continues to trade above all of its key moving averages. Back to you guys.
Right, interesting list as always, Hormaz. Thank you very much for that. Just sort of looking at names beyond the obvious, which of course we are talking here with regards to GST being the prime mover. We have Jigar Mistry now joining us, co-founder at Buoyant Capital. Jigar also tries to look beyond the obvious. And Jigar, I believe you have a slightly hatke take on this entire GST issue and what it can do and what it cannot do as far as demand across many of these sectors go. So let's start with that today, Jigar.
Hi, Prashant. Thank you as always for inviting me to your show. So yes, see, you think you actually cannot destroy or create money, right? Essentially, it transfers from one place to another. So think of all the money that governments across the country can raise, and then it can decide to spend it at various places, do revenue expenditure, do transfers, and then do capital expenditure. Now, there was a government level report some time back which suggested the multiplier effect of all that's going to transpire. Now, when you look at the capex multiplier, that was in excess of 2 times. I think it was, if memory serves, 2.5 times or thereabouts. Whereas the revenue expenditure and the transfers were at around 1 time or thereabouts. So essentially, look at the series of events. First, you had the central government in the last budget give out close to 1 lakh crores in terms of lower taxes. Then the state governments announced that they will sort of do cash transfers of 3 lakh crores. But we analyzed the budgets of some 16 states and they have provided for half of what they had announced. So add 1.5 lakh crore to that 1 lakh crore. Of the 2.5 lakh crore that has somehow been in progress, you have essentially pushed the capex out both at the central level and at the state level. The capex of these 16 states is down in the negative trajectory, what was going at around 30 or 40%. And at the central level, we know that they've pushed out capex by 1 year, and what was supposed to happen last year will happen this year now. So from one standpoint, you are sort of, taking the reducing the spending where the multiplier effect is the highest and giving the money in the hands of people which can end up sort of either saving that money or spending that money. But in certain cases, no, it's certain that essentially the multiplier effect is going to be much lower. So from a central economy standpoint, you're likely to see a lower activity growth as far as sort of the growth of the country and the economy goes. The GST cuts, on the other hand, however, are a lot more incentivizing the consumption part of it and not just the saving part of it. So to that end, it is different, but we'll need to see 2 points. One, what these sort of 1.5 to 2 lakh crore is able to do, which the previous 2.5 lakh crore has not been able to do. And secondly, also with regards to some bit of timing. Now, I'm sure this point has been raised, that if sort of you're pushing the festive demand out by 2 or 3 months, the market will most certainly look through this. But we will not have a very adequate assessment on what the going rate of growth is, right? Because in the first quarter, April, May, June, in the base, you had the peak election season. And the results that have been out so far is showing single-digit growth. And the next quarter will still not know what the extent of the slowdown in growth is. So we'll have to wait for the third quarter to essentially see how this thing plays out. So in and of itself, it's a good move, but essentially we have to look at it from a trade-off standpoint and not just a singular reduction. It's just changing of pockets from one end to the other is the way we see this, Prashant.
Okay, Jigar, interesting thoughts. So, I mean, would you look at playing a big revival in consumption at all towards the end of the year as we get to the festive season? Or do you think that's been the market's big hope, right? That come festive season and everything will start looking, or most things at least will start looking better. Are you in the camp who believes that? And if yes, and how are you positioning for it?
Right, Survi. So both from an earnings standpoint and valuation standpoint, right now, oftentimes we forget there are two different aspects. If sort of the earnings growth is going to play out, but if it's already in the price, then you are essentially not too keen to play that as a theme. Like, for example, defense or capex, until say 6 months back, a large part of it was in the price. And even though you expected the growth to be reasonably okay, it was maybe a set of good companies, but not set of great investments. Consumption from that standpoint at the margin is interesting from an earnings recovery standpoint. Where sort of it plays out is different. You may not have staples do all that well, at least in our opinion. We think the discretionary part of it will likely be a lot better. And therefore, I think those are the places where you are likely to see a decent growth in earnings. When you look at it from a valuation standpoint, they are increasingly more attractive compared to the rest of the market, because I don't think a lot of the market is sort of geared towards building a recovery trade there. So we had sort of starting the budget of the central government, I think in that day when we had the discussion, we were of the opinion that this was the start of a pivot. We see GST as sort of, the sort of pivot in the final cadence. And therefore, this will play out over the next sort of few quarters and years is the way we see this.
All right, Jigar, hi, good to see you in. What about the bit of a fillip that we have got for the steel sector? Chinese steel prices have recovered. Over here, because of monsoon, prices have moved down, so that there is that bit of a gap. So post-monsoon, hopefully there's a catch-up on the domestic front. But the bigger news came yesterday, where there is going to be some duties in place that protects the domestic steel industry for the next 3 years, 11 to around 12%. Do you think reason enough to get into some of these names?
Not so much, Nigel, because see, essentially, unless when you are out of these super cycle periods, then it's pretty much sort of demand supply that will take over. And if you are keen on commodities per se, you are keen because of two reasons. One, there is an excessive sort of consolidation of capacities, which we are not seeing in steel, or they become a viable alternatives to the fiat currency. Again, in that case, you have non-ferrous metals as a much better viable alternative for speculative money to get positioned. So net steel, given sort of you don't really have an exchange to talk about, you don't really get positioned there. What might be promising in your line of thought essentially is the non-ferrous metals. And when I was on your show last, we did discuss about it. But incrementally, given what's transpiring, cement becomes that much more interesting. because a large part of this money will go to the middle and low income housing, and 70% of cement by volume is sold to individual home builders. These are the people who buy 10, 20 bags of cement and build an additional floor and room above their houses. This targeted play essentially would be to sort of a lot of these players. When you add the fact that essentially since 2008, if memory serves, you have the EBITDA per ton more or less stable, at the industry level. And with the two large player consolidating capacity, you could arguably see sort of, the prices improve quite dramatically. Essentially, they're selling cement at 4 rupees a kilo at NSR, and they've completely mastered the logistic even at this price point. So if I'm sort of likely to play commodities in your line of theme, non-ferrous suits better. But the way we have chosen to play this is through cement incrementally.
Okay, all right. Jigar, good conversation. Thank you very much for joining us, and appreciate your time here on CNBC. Well, let's get you the F&O stats, the latest numbers on how the market is moving. Nigel is standing by on the F&O desk. Nigel, over to you.
Well, it's been a good trading session. One of the problems, though, is the Nifty Bank can't go ahead and conquer the 20 DMA. So we went to that mark earlier on the trading session, but by around 11 a.m. odd, we have failed to get past the 20 DMA on the Nifty Bank. The Nifty, till the last time I checked, we're still holding above the 20 DMA. So that's the important mark. The Nifty Bank needs to get past the 20 DMA. But if you're looking at the markets on the whole, the Nifty is up. The open interest is more or less flattish, though there is a bit of a short covering bounce that's playing out for the markets on the whole, because the Nifty Bank is up close to 450-500 points, though it's come off the top, and open interest is lower, clearly telling you there's a bit of a short covering bounce that's playing out there. The problem today is the other pillar of the market couldn't hold up. That's the IT index. The IT index, in fact, has been underperforming. It's sitting with a cut of close to around 0.5% or thereabouts. Moving to the options data. Now, the 24,700 call writers, they would have gone into the weekend, on an optimistic note, because the markets were struggling to get past that mark. But just take a look at what's happened today. There's a big open interest drawdown out there because those call writers, well, they are packing their bags. They're trying to get out of the market. They've got stumped on the wrong side. However, what's opened up is this 25,000 call. And the premium has moved up from around 32 rupees. It went up to around 100 rupees. Last time I checked, it was at around 80 rupees. So there is a mix of activity happening at around the 25,000 call. It appears the writers are at play, though, and the smart money is eating into that strike. But the 24,900 put, that's going to be the make or break strike for the bulls perspective, because the premium was around 300 rupees. It's come down to around 90 rupees, and there was writing at that particular strike. So for those writers, it's important that the 24,600 level, that holds out on the downside, while on the upside, the 25,050 odd mark, which we almost went to today, and going by the options data, the 25,100 mark becomes a bit of a resistance zone out there. Stocks that we're looking at, well, there is fresh buying being seen on select counters. So you have Maruti Suzuki, big surge in the stock, open interest up, fresh buying being seen on that one. Uno Minda, that's the other one that's moved up, and volumes are rather high out there. So big open interest surge is what we're seeing on that particular name. L&T Finance, that's coming for a bit of a short covering bounce because the stock is up 5% and the open interest clearly is unwinding itself. So there is a bounce that's playing out on L&T Finance. I think we should get that stock up for you on the screen. And Suzlon from intraday, if you pull up the futures plate, you'll see that there's a big surge in open interest and the stock actually has fallen off the cliff intraday. So there are short positions that are getting added in Suzlon. But the one that you'll track by the end of today, the PNB Housing Finance, I've been highlighting this for the last few days. There is gradual unwinding of open interest. And it appears today there's enough that's been done such that the stock could possibly come out of the F&O band when we get the file later today. Because, as a percentage of the market-wide position limit, it came down to around 78%, which effectively means sub 80%. It moves out of the F&O band. So we'll keep an eye out on that one. Back to you guys.
All right, Nigel, thanks very much for that. So keep an eye out on those specific names with regards to, their movement out of the ban list. We'll take a quick commercial break here. D Street Chatter with Nimish lined up. We'll talk about what's the buzz out there and, of course, what stocks is on his list. Stay tuned.
Welcome back. Well, we've come off a little bit from the top as we speak. You'll want actually the Nifty to at least hold on to these gains. Otherwise, it could go down as a bit of a disappointing finish to trade. That said, let's find out what dealing rooms are doing today. Nimesh joins us to help us out with exactly that. Nimesh, what's the buzz?
Hi, Nigel. While the gap up has to some extent sustained, but it lacks momentum, and that's largely because the FIs are still not big aggressive buyers, and nor they have cut their short positions as well. So, that explains that, there is not big second leg of momentum in today's market. I think what's happening is the DI seems to be quite active today, and largely into sectors where, the sectors which are likely to benefit from the GST announcement. So, most of the gains in the auto, cement, as well as in consumer names have held on since the morning gap up, and largely because of the domestic buying. So that is one leg which has seen a bit of buying interest in today's market. I guess the street is anticipating some more developments or some more reforms to be announced by this government in the weeks to come. So that's the hope there. But I guess still, not, at least from an FI perspective, there is still no big aggressive buying or short covering. Technically, 24,950 is a big resistance level, and we've seen in today's market we've reversed a bit from those levels. So that's an important level to watch out for on the upside. If that gets taken out, the feedback is that you might see further aggressive short covering rally in days to come. So that's a technical level to watch. But from today's flow perspective, it's the DIs who've been aggressively buying into all those GST hopeful stories, which is the cement, autos, as well as the consumer names.
Oh, absolutely. It's been GST all the way. But apart from all the GST buzz, any other chatter, anything else interesting on your radar today, Nimesh?
Well, all my 4 stocks are X of the GST movers. So the first stock on my list is Adani Ports. We've seen a sharp recovery in that stock from the intraday lows after a large block. Nearly 1.5 crore shares got changed hands. And I understand one of the leading global FI fund was a buyer in today's block deal. Not sure whether it will get disclosed because it's happened in both the exchanges, but a very large global fund was a buyer in today's block deal in Adani Ports. So that's the first stock. The second name is Aditya Vision. That stock is up 16% in today's market on large volumes. Well, C2 was anticipating a large block. It's not happened yet, but before the block, you've seen a big move in that name today. So that's the reason why that stock is buzzing in trade. The third name is Godrej Industries. This is a holding company of the Godrej Group. But we've seen some action back in this name as well. In the last couple of days, the volumes have picked up. I understand some large HNS seems to be active buyers as well, and hence a big move in Godrej Industries as well. So expect very high delivery volumes in today's market. And the last one is Camlin Fine. That's in a one-way downslide post the weak quarter one. The street was anticipating a sharp Q1, but it was the other way around, and we've seen a very sharp correction in that stock as well. My sense is that large part of the selling from the larger HNIs in Camlin Fine seems to be largely over after the recent underperformance. So watch out for that as well. But looks like that large part of the selling is over in Camlin Fine.
Nimish, Adani Ports, do we know FI?
My sense is, Prashant, it's a single long-only FI fund who's bought into today's block deal. Let's see if the name gets disclosed because it happened in both the exchanges. So you might not see the disclosure at the end of the day. But from a trade point of view, I understand one of the very large long-only FI was a buyer in today's block.
We'll wait for the name. I mean, actually, both sides. The other one is SPML Infra, Nimesh, right? I mean, I think you had this on your list last week, and that order is there was a buzz of a large order.
That's right, Prashant. So the stock is up 6% in today's market as well, and that's what I picked up on last Thursday as well when I put it on the chatter list that maybe this company is going to announce some large order wins soon. So that's a big trigger to watch out for. The order size could be in the range of 800 to 1,000 crores. So that's going to be quite significant for a small company like SPML Infra. So that's a big trigger as far as that stock is concerned.
Okay. All right. We'll watch out for all of those buzzing stocks. Thanks for that, Nimesh. Well, we've got Somel, I think, back with us. So let's get some final trades in. Somel, there's a bit of a giveaway from the top. From the peak, the Nifty is given off about 50-60 points. Final advice on indices, the levels to track and keep in mind, and of course, any other stock ideas as well.
For Nifty, I think the crucial levels on the downside for a very, very short term is around 24,850. That will be the first hurdle. On the downside will be a support. The second support is at 20 daily exponential moving average, which is also very close to the 20 simple daily. So 24,750 would be a very crucial level to watch out for. But I'm not expecting markets to go below 24,850. Buy on declines should be the strategy on Nifty, and I'll be expecting 25,200 levels in probably next week. The stocks which I'm watching is from the metals pack. The first one would be JSW Steel. JSW Steel is looking good. A small consolidation has broken on the upside. And the stop loss would be 1040. Targets would be above 1200 levels. But in the very short term, the targets is 1200.
Mm-hmm. Okay, all right, got that, Somel. We'll leave it on that note. Thanks very much for joining in. Let's go to the big global story now. And like I've been mentioning earlier as well, European markets are quiet with a little tinge of red. US futures are absolutely flat right now after another strong close on Friday. And center stage, obviously, is this big geopolitical event, this big meeting that's happening. US President Donald Trump meeting with the Ukrainian President Volodymyr Zelensky and several other top EU leaders. This is happening at the White House today, and it's just days after Trump's controversial Alaska summit with Russian President Putin, where Trump signaled support for Putin's proposed peace deal, requiring Ukraine to cede some territory. European leaders, including Emmanuel Macron and Keir Starmer, are in Washington to back Zelensky and present a united front against any settlement perceived as favoring Russia. The US has floated robust security guarantees for Ukraine as an alternative to NATO membership, while European officials reportedly want negotiations to focus on a ceasefire before discussing peace terms. We bring you this next report from NBC News, which captures what Ukraine and their European allies are looking forward to in Washington, D.C.
President Zelensky said he still wants a ceasefire with Russia to stop the killing while a final deal is worked out.
Putin has many demands, but we do not know all of them. And if there are really as many as we heard, then it will take time to go through them all.
Zelensky spoke before heading back to Washington for the first time since February. And this time, he's got backup. Zelensky is clearly hoping to avoid the embarrassment of his last visit when he was overtalked and ultimately kicked out of the White House. But what's at stake for Ukraine goes far beyond protocol and pride. Russia occupies 20% of Ukraine, and President Putin has said all of that territory and more is his price for a deal. Ukrainians find that outrageous and believe that Putin should get nothing of what he's taken by force, and that Ukraine must have security guarantees from the West so that Russia won't invade again. Ivana Skiba is a journalist in Kharkiv.
What are you hoping will come out of this meeting between Zelensky and Trump?
My hope is that Western world or democratic world still exists, that we still have common values, common dignity. If we give up land, this war will continue.
As President Zelensky heads back to Washington, Ukrainians will be watching how he's received. Will he get a red carpet or another cold shoulder? And will President Trump pressure him to accept Putin's demands for land?
Okay, all right. Well, let's get back to our markets. We have Sudeep Bandyopadhyay, Group Chairman, Indy Trade Capital, who joins us. Hi, Sudeep. Good to see you, Ben. Sudeep, I was reading a note of Motilal Oswal, and they were saying that we have underperformed, but now the best is yet to come. Money is going to be there in the hands of various, Indians. There has been an RBI boost as well. The central government as well is doing their bit. So they're expecting the second half to be far better. Do you think so? And if yes, how do you play it? What do you buy? Autos, cement, consumer durables? What's on your radar? Name one stock.
Good afternoon, Nigel. In fact, I completely agree with this theory. I think we were having two factors, which is the festive season demand, which is going to kick in very soon. And we also had good monsoon, so which is, again, boosting income in rural India, definitely. On top of that, the interest rate cut by RBI has been deep, and more interest rate cuts are being expected now, post the inflation coming down. And finally, this entire GST booster, which the Prime Minister has talked about on 15th August, definitely will help. consumption one way or the other. And we definitely feel that certain sectors, particularly like automobiles, consumer durables, and cement will benefit. We have been favoring cement for quite some time, and we believe that all the factors are combining to give cement industry a good position. They have managed their costs very well, as is apparent from the financials of most of the cement companies. The demand is picking up with government spending heavily on capital expenditure. And finally, the pricing power to an extent is back. Under the circumstances, this GST rate reduction from 28% will definitely give them a big boost. So yes, automobile, consumer durable, definitely, but they have already moved up today quite a bit on the expectation of this happening. So I will stick to cement, which we have been recommending for some time. Ultratech has been our favorite in this sector, being the industry leader and having managed costs very well. So I will continue with Ultratech and keep watching this space.
Okay. All right, Sudeep, stay on. We'll have some more questions for you, but we do have to take a very quick break. Back with the markets in just a bit. Welcome back. 5 minutes to go before the day closes out. And it's the same story. You've got big, solid gains in a lot of the auto stocks. Beyond that, let's see what else really stands out today. It's really autos all the way. And then obviously there is this entire durable space, ACs, consumer durables, electronics. Amber, for instance, 7.5% on the upside. On consumer durables, I mean, AC stocks and beyond ACs as well. Sudeep, anything that you would look at buying?
I think, Survi, what has happened is today the prices have moved up quite a bit. Look at Voltas, look at Blue Star. All these stocks have moved up really sharply today, and probably this entire GST gain is already getting factored in, though it's not been announced specifically. So I'll be a little careful. If I have to buy one stock in this consumer durable space, probably I'd go for Blue Star. I think that does look good at current levels as well. If I have to buy one of these third-party contract manufacturing EMS kind of businesses, I will go for Amber.
Okay. Amber and Blue Star. Two names. Anything else? Any GST pick? I know it's a bit, maybe a bit premature, you would say, but the market's already moved and it's giving you its verdict, right? Any other GST stock, hotels, footwear, cars, two-wheelers?
Yeah, I'd rather go and play the footwear bit because festive season is coming. So Metro Brands can be an interesting pick, knowing that 1,000 rupee below and above and the GST kind of relief which we can expect there. So I think it'll be a good idea to look at Metro Brands.
Okay.
Okay, all right. Any view on Ola Electric?
Well, Nigel, I'm a little careful on Ola. I think it had promised quite a bit, but unfortunately, it's been a story where the investors have continuously suffered and lost money. It went up to about 140 levels, if I remember rightly. And from there, it has been a one-way journey. The management is talking about a lot of interesting things. I did see the interview in your channel, but I'll wait and watch. I think they have lost the leadership. They are one of the players now. The leadership is clearly with Bajaj, TVS, and the traditional guys who have an established distribution channel. And I think very reliable product. The Ola product itself was questioned, and that is a very bad thing to happen for a automobile or a two-wheeler manufacturer. So I will wait and watch this space. Their gigafactory is coming, getting ready. That's an interesting development, though it has got a lot of costs to be absorbed over a period of time. But we will watch this space, but not recommend a buy at this stage.
Okay, I think that's well put. Some mutual funds, I think Helios, for example, we had the CEO of Helios Mutual Fund with us last week. They've taken a bite into Ola recently, but many others still staying out. 250 points, by the way. So the high of the day stands at 25,022. So we are essentially going to end at this rate off by a fair bit, right? So a cooling off, which is what we've seen on the Nifty index, and I think for the Nifty Bank as well. Maruti will end up with a 9% gain, right? And across, I mean, autos, four-wheelers, two-wheelers, AC stocks, cement stocks. I mean, in some ways reminds me of that, 2019? The corporate tax rate cut, which happened late in